Hello, everybody, and welcome to the first conversation of the day, and undoubtedly the best one, no question. We're going to be talking about the European crypto scene, which is quite extensive, and as Mike so eloquently put it, we have some heavyweights on this panel to talk a little bit about it. So we're going to kick off with some introductions. Charlie, let's start with you.
Good morning. Pleasure to be here. My name is Charlie Morris. I'm the Chief Investment Officer at ByteTree. We're a data business, blockchain database business, been around a few years. We pride ourselves on data accuracy and also research and a small asset management arm. By background, I came from the big, ugly old world of finance. I was a fund manager for many years at HSBC.
Excellent. Marcus.
Morning, my name is Marcus Hughes. I run Coinbase's European business. Joined about 3 years ago now, which feels like a lifetime in the crypto space. Previously was in traditional finance as well.
And Tim.
Thank you. Good morning, everyone. My name's Tim Grant. I'm the head of Europe for Galaxy Digital. I think by now everybody knows what we do. We're across sales and trading, asset management, mining, advisory, venture, principal investments, and of course custody, given our impending closing of our BitGo acquisition. So really in every area of the space. Historically, I'm a TradFi guy, but it's been 6.5 years since I met Coinbase and Ripple. It's actually the 19th of March 2015. I'll always remember it now.
Wow.
I had no idea about blockchain and Bitcoin before I turned up that day. And by the end of the day, I had bought Bitcoin at $200 on Coinbase. But let's not talk about what happened after I bought it at $200.
Well, I'm just impressed that you got through KYC that quickly, so well done. So, lots to talk about, but as mentioned, this is a conversation about the European crypto scene. So where does Europe stand versus the rest of the world? I mean, this is the country, or sorry, the continent, I should say, where Ethereum held its ICO, where some of the most prominent names in crypto not only originated, but are doing their development. And today, you can probably find more GitHub pulls on, from Europe than anywhere else in the world. But Charlie, let's start with you. You have seen some interesting data points, talking about first, just kind of the adoption overall of Bitcoin. Your organization is really tracking flows of Bitcoin right now. First, what's going on overall in the Bitcoin market, and where does Europe stand when it comes to Bitcoin and crypto trading?
There's so many things to say there. Firstly, I'd split the world into 3 time zones. The overnight, from our perspective, the overnight Asian session, the European session, which would include UK and Africa, and then the Americas, which would include North and South America, not just the USA. And it's notable that Asia was huge until the China ban, basically. And now Europe is really punching its weight. And I think that there's obviously a burst of volume in the market every day at 2 p.m. when America wakes up. But I think one of the problems with the on-chain activity is tax in the United States. So if people buy Bitcoin and then they don't move it, which I think in Europe they're probably doing much more in DeFi and those sorts of things. On the data point of what happened overnight, well, let's look at the fund scene. So everyone's heard of the Grayscale Bitcoin Trust, which holds 650,000 odd Bitcoin, having started accumulating in 2013. Pretty good stuff. That stopped taking flows earlier this year, but we track all the publicly available funds in the world, and that's exchange-traded funds mainly. They started in Europe back in 2014, a long time before they did so anywhere else. Starting in Sweden, now they're very active in Switzerland, and in 2021 we've seen lots of fund launches in Canada as well. So those are the hubs, those are the crypto hubs for asset management. And last night, how many Bitcoins did the funds buy yesterday? 2,000, $10 million. $10 million went into Bitcoin through funds alone yesterday, which I think is pretty amazing. That collapsed, of course, in May. There was panic in the market, May, June time, but it's been picking up, and last night we're starting to see accumulation again.
Fantastic. And Tim, you've recently seen some reports indicating that Europe is overtaking other geographies.
Yeah, I think it's definitive. I just found it on Sunday. It's worth going to check it out. There's a Chainalysis DeFi transaction report. And, we all know Chainalysis do great work, so we trust the quality of their data. And 3 elements. It's actually quite a big report, and it's worth sort of absorbing it all. There's lots of elements that are really quite meaningful, but I'll highlight 3. One, and this is the one that I think is great for this panel. As a percentage of transactions globally, Europe is now the biggest of those three jurisdictions. I did not see that coming. I thought we were a little bit away from that, but it's definitive. It's true. It's now happened. So that's great. Secondly, Europe, perhaps unsurprisingly, but it's worth saying, is the biggest trading partner of the other jurisdictions. And so that's pretty significant. And thirdly, then you ask the question, why? Where did the transaction volume come from? Well, it comes from the large institutional 10 million plus tickets. So that tells us that basically institutional DeFi is being run out of Europe. Everybody's trading more with Europe than any other jurisdiction. And this is the sort of the platform now where Europe comes into play. And I think what's interesting, I've had this conversation with a few people this week, is you look at the other two jurisdictions, US and Asia, and though they got in earlier, they were somewhat plagued by issues, and the very natural issues that we all know, the hacks, et cetera.
Some unnatural issues, I would say.
Some extremely unnatural issues, including the llamas here. Although I do love that. But here it's been more muted. We haven't seen as much of that sort of, those negative headlines per se. And I think that's now about to switch and be a benefit, because the European community has been a bit slower on the uptake, I think it's fair to say. But now we're seeing this increase in activity with no real negativity to get away from. Sure, we've got headwinds, and I'm sure we'll talk a lot about regulation, but it's an extraordinary platform for Europe to go on and dominate from here.
So Galaxy, Coinbase, and Wachsman all founded initially in the United States, but of course with major European presences. Marcus, you're responsible for the European business of what I think is the most important company, no question, within our industry. And clearly, they've put you in charge because they think it's a big deal. What are you seeing from your vantage point? Is there real growth opportunity in Europe, and is this happening at the retail level, institutional, infrastructure, or everywhere?
Yeah, great question. I mean, so much to unpack there, and we could talk all day about the scale of the opportunity. I think what we've seen recently is, sentiment is a really important factor here. And if you rewind even a year or two ago, the sentiment in the mainstream media more generally was crypto is a bit of a kind of side thing, often focusing on negative aspects. Sure, there have been exchanges that have got hacked. That's bad for the industry as a whole, of course, but there are also a lot of reputable players. And I think that narrative has shifted now. NFTs, various other things have kind of captured the mainstream consciousness, and now you see a much more balanced assessment of the industry. Of course, there are challenges, there are problems that need to be tackled. It's the same in any nascent industry. So I think that broader sentiment, that broader narrative for me is a really important shift, and that's great to see. More broadly, I think you've seen more and more people move into crypto, take that first kind of dipping the toe in the water. And I think that's an important kind of psychological step, because once people look into the ecosystem, often they get drawn in. It's kind of a bit of a rabbit hole, the excitement that's out there, the amount of products and services. And so you'll find that, to my mind, buying Bitcoin for kind of investment purposes was, if you ask the average person, they might just say that's all they really knew about crypto. I think that's changing now. I think we are moving more towards this kind of utility phase where there's a whole range of different products and services kind of powered by crypto that will really kind of capture people's imagination. I think on the institutional side, it's been kind of revolutionary, really. You've seen, up till about 6 to 12 months ago, again, it was primarily kind of crypto market makers, crypto hedge funds that kind of dominated volumes.
And this was quote unquote institutional crypto, which should be noted for everyone in the audience, isn't exactly the same type of institutional finance that you gentlemen all came from before, or at least it wasn't.
No, I don't think it was, but I think it's now increasingly trending in a direction where everybody realizes that they have to be part of this. And so you've seen a lot of the kind of traditional pension funds, traditional hedge funds, and so on, family offices, high net worth individuals. Everybody now is, at the very least, having the conversation, and many are committing meaningful capital. So I do think that narrative has shifted. I always kind of say, I think we're really at the beginning of the journey here. This is not the end. Things are literally just beginning. And so I think there's so far still to go, but a lot of encouraging signs, notwithstanding, obviously, there are headwinds. I think regulation, which I'm sure we'll touch on, is an important part of it, particularly on the institutional side, but also on the retail side. Consumers want that confidence that they know that what they're dealing with is kind of overseen, that there are rules of the road. And so I think that will be important for kind of gaining trust and confidence in the industry. And again, lots of positive signs there as well.
So it is, I just want to make sure it's crystal clear. You see this as a growth market, Europe?
Massively.
For crypto?
Massively.
Okay.
No question.
At the beginning of the journey?
Totally.
I kind of see it as a bit the end of the beginning in some respects. Like if any, you can define it in so many different ways, but if you look at I remember when I started and I was doing this circuit back in early 2016. We were doing these conferences back then. It was a different bunch of people and it was a different vibe altogether. But we would often compare to the beginning of the internet, that old chestnut, like, we're about 1990X versus the beginning of the internet. And it's like, well, okay, whatever, I don't know what year it was, but I know this. the pace of acceleration versus what we were going through back then is vastly superior. That, you know, this is an inflection point where, I mean, just look at this year alone. Look at some of the, I'm talking this with someone else this morning. Look some of the stuff that you thought was completely bananas 6 months ago is now just part of the mainstream. Some of the NFT stuff, some of the more metaverse stuff that's harder to get your head around. So we're moving at a breakneck pace. But, and so much has happened, and look at every big traditional financial institution that's entered into the space. Look at the Coinbase story, look at the Galaxy story, look at the AUM, look, it's all of that great. But we're still only really just at the end of the beginning. Like now we've got this phase where there are infrastructures we can rely upon more to build though. There is a lot of money in, but we've only, you know, as Novo was saying yesterday, we're only at kind of a small fraction of the assets that can get into this. This is the end of the beginning. Now we're in the next phase where it's real growth. It's a bit more institutional. It's a bit more buttoned up. It's a bit more trusted. It's a bit less bananas.
So let's kind of define that a little bit. You mentioned AUM, and certainly there's a lot more money in the space. That's clear. But I think one of the more interesting things to talk about, and all of you here are responsible for this in your respective organizations, is the flow of human capital into the space. It seems today, to me, that there's less of a career risk, and that people in Europe are now willing to take jobs in crypto that previously simply wouldn't. They'd shy away from it. They thought it might be too risky. Are you finding the same things? And let me make sure to define it for this specific panel. Are you finding that to be the case when you're hiring people across the continent?
Yeah, I mean, I think in terms of, you know, a career path, people want actively to work in crypto now. It's not a question of even having to sell them. You know, they're coming to companies like ours and saying, look, we'd love to, you know, to work in this space. So I think that's very much shifted. You know, even 3 years ago when I kind of came on board, I thought to myself, you know, how much of a risk really is it? I had a huge conviction that this was going to be big.
Says the guy who joined just before the crypto winter hit.
Yeah, there we go. It's true. But I mean, you know, once you've been through that kind of period of time, and I think you just have to kind of take the view that this is a longer term thing. It's not going to happen. But I mean, part of the, you know, interest in joining the crypto industry, whatever part of the ecosystem you find yourself in is building something that's kind of revolutionary and new. So I think, you know, there's a huge amount of capital. I mean, the figures in terms of venture capital coming into the space this year has been the biggest already on record by some considerable margin. You know, the amount of people coming into the space, you know, has grown exponentially. And of course, people bring with them the kind of processes and the structures, you know, to help kind of take things to the next level. So yeah, I think very, very, very interesting from a human capital perspective.
And Tim, did you see that as well back when you were at SDX?
Definitely, it's actually been an interesting journey. You know, I came in 2015. You know, Bitcoin clearly was there, but you know, Ethereum was not really that much of a thing yet, right? You know, it was 2015. Ethereum obviously came into being, but it wasn't, so it hadn't permeated the consciousness. DeFi wasn't really something that we talked about in the same way we do now. So when I came in, I owned some Bitcoin, and I'd kind of scoured the internet for information, and that got me the job. That doesn't work anymore. You kind of need to know what you're talking about. So it's interesting that there's a lot of people that want to get in, but you kind of, the bar has raised for the quality of people that you need to be effective very, very quickly. So, you know, it's a broader talent pool, but you still got to be discerning. But it's hard. There's also a talent war, right? Anyone who's any good is going to be bid up in multiple places. And the other thing that's worth mentioning is, as we build our workforces, especially those of us who all came from the traditional world, you can't think the way you did in the traditional world. You now have to think about having some gray hairs, people who've seen it, the booms and the bust and know kind of how to deal with a large organization and et cetera, and the journey of building a company. But you need the youth because there's a different mindset. You know, our best traders are our youngest traders because they understand the complex web of projects and DeFi, you know, sort of connectivity out there. And that's just something that a lot of us that are more older just can't get our head around. We're not built that way. So you need a bit of a combination of all of the above. And that's kind of exciting. I know that's something that Novo gets really excited about. It's like the fact that we've got all these young, brilliant people in our company mixing with the traditional TradFi guys and the tech guys. Like, we need tech DNA, which is why we bought BitGo. It's fascinating.
100%. Well, there is something to be said for traditional instruments, or bringing traditional-like instruments into crypto. One of the great flaws that we've had is we simply didn't have the infrastructure. You talked about custodians. Actually, both of you talked about security. And there's a reason why hacks happened. Multi-sig wallets, for instance, were like nearly impossible to find, and even to install a Gnosis wallet for Ethereum was very complicated and remains to be the case, as an example. And that was pretty much the way someone would secure Ethereum. But it also comes down to trading products. For instance, how would one know what price should be? So Charlie, you've been building here in the UK, or an organization that is trying to help transform the way we understand Bitcoin, for instance. Can you talk a little bit about the journey for your organization so far, and what does that mean in the context of London and the tech scene here?
Yeah, well, I'll do the London bit first. I think this is a European panel, so how much blockchain data is absorbed by Europe compared to other parts of the world? Well, the USA is number one, according to the BitNodes map, with 1,800 nodes downloaded. And then Germany comes in second at 1,700. And then you've got France, then Amsterdam, Canada, and London comes in fifth. But London makes up for in other ways with trading infrastructure and as a center of capital. So a lot of projects are born here because it's a money hub, let's face it. But coming back to the data side of it, my background was a multi-asset fund manager. And I used to be a big fan of things like gold as alternative assets, emerging markets, in the pre-2008 years, and the commodities, these sorts of things. Also, different hedge fund strategies. And it was all about trying to find a good Sharpe ratio. So it was all about trying to make money for your client without lots of risk. And you could do that in portfolios by having lots and lots of exposure to low-risk assets and some exposure to high-risk assets, or you can do it by having negative correlation. And so the search for negative correlation has always been a big thing in the asset management space. And Bitcoin wasn't exactly that, but it was certainly something you could put a small amount in a portfolio and it had great optionality. It could really go to the moon, and it did over the years, and may continue to do so over the long term. But I wanted to be able to measure it because I think if you've got fiduciary responsibility and you're making investment decisions on behalf of institutional investors, you've got to be able to say, I've looked at this, I've kicked the tires. You can't say I went on Twitter and there's a good story about El Salvador. It's got to be more to it than that. And so I was looking for measurables. And to my mind, it was what does Bitcoin do? What's its job? Its job is to transfer value. And so therefore, if it transfers a lot of value, then it's done its job well and it's valuable. And if it doesn't transfer any value, then it's not doing its job and it's not very valuable. And so we measure that. And please, by the way, come to our booth, ByteTree's booth at the far right after the thing. We'll show you.
Okay, all right. Let's save the shilling till the end.
Yes, I'm sorry.
But yes. So, but you've been building this in London, and so you've been building a team out here. Do you recruit people from here, from traditional finance? How do you constitute your team?
We've got a small team, but I tell you, we've got an intern who's flown through PPE at Oxbridge, and then came out on top of law schools, impeccable CV, and he wants to work for us. 22 years old, he wants to come to crypto. I'm saying, get a real job with a real firm. No, I want to be in crypto.
Wow. Well, so that's the thing. We're transforming that right now. These are the real firms today. And let's go a little bit. Let's talk about regulation. I think Marcus, you mentioned that earlier. It's quite important. One of the challenges, perhaps, in Europe is that it's so multi-jurisdictional. Of course, there's the web of different organizations, whether the EU and the UK, which is not EU any longer. What does that mean for your organizations? Do you have to keep on top and have like live intelligence on kind of regulation and policy across Europe? Is that something that you're paying a lot of attention to? Marcus? Yeah,
unquestionably. I mean, one of the core tenets for Coinbase is trust. Trust in, and to us kind of means that your assets are secure and that we engage constructively with regulators and have done from our very early days, which is not necessarily common across the crypto industry, or certainly wasn't. I think it increasingly is. What's happening in Europe right now is interesting. I mean, I think because the European Union obviously has many harmonized sets of rules, and we have kind of MiCA coming down the track, we can expect there to be a kind of harmonized framework for most of Europe, and obviously the UK is kind of pursuing its own path now. What we've seen prior to these regimes coming in is a number of consultations in the UK, the FCA, HMT, and so on have started to think about what's the framework that we need to build out. And I think sooner rather than later would be my sense. It would be good to have some kind of at least initial framework. So do you think that we will have some clarity? I think we will. I think there have been a number of consultations. It would be great to see those translate now into more kind of direct action. And I don't think we should try and solve for having everything resolved on day one. This is a very fast evolving space. And I think, categorization of different types of assets,
Interesting.
hierarchy is an important starting point to my mind.
So you mean, like, for instance, in Switzerland, there's securities, there's utility tokens, which exist there, right? There are different frameworks, essentially, and categories. Do you think that that's something that we might actually see standardized across Europe?
Yeah, I mean, it would be nice to see that. I think across the European Union we will under MiCA.
Yeah.
There will be, e-money tokens, for example. How do you handle stable coins as a perpetual question
It is.
globally? And this concept of e-money token has come in now under MiCA, which I think is interesting. So it's not e-money, but it's not the same as Bitcoin. So I think that kind of categorization is critical as a starting point. FINMA was a pioneer in that area. They started out with this category years ago now. I remember when I first came in, it was the categorization I was reading to familiarize myself. Obviously, things have moved on. The industry has changed. The types of assets have changed in the intervening period. So I think having that categorization is helpful. And then, what are the frameworks? What are you thinking about? Well, AML issues and KYC is really critical for the industry. Security of assets and so on. I don't think we should try and solve for every problem, but we can start with a framework and then build on it. And of course, Germany has decided to do that. With its crypto kind of regulatory regime kind of going ahead of MiCA to bring something in straight away. And many countries now have brought in kind of registration regimes. And these registration regimes require you to kind of go through a pretty rigorous process, actually, looking at your business. And I think regulators across Europe are using that as a bit of a kind of fact-finding mission to understand crypto businesses, crypto exchanges, and so on.
And as a business leader, are you finding that helpful to have a type of clarity, to know that what you're doing is within some guardrails that let you be creative within that?
Yeah, I think having certainty is always good for a business. It also raises the bar to entry, right? So ideally you have reputable players operating within kind of the guardrails that have been set. So I think that's a positive for the industry. And of course, absent that, you've only really got existing kind of securities laws. You've got e-money and payment services rules. There is a big gap there where crypto doesn't neatly fit in most instances into those rules. So I think we'll see this move very quickly. There have been developments already in Singapore and Japan where there are already kind of regimes that have been in place now for a little bit of time. Obviously, the US is a lot more uncertain with federal versus state and so on. It's a much more complex landscape there.
Certainly, and with a lot less clarity than we're seeing anywhere in Europe. So Tim, I mean, we talked about securities there, Marcus. You spent a lot of time understanding the digital securities space, security tokens, for instance. And we've seen that bureaucracy has kind of slowed that down to a greater extent, perhaps, than was imagined back in 2016, 2017. Do you think that there is going to be a burgeoning digital security scene in Europe?
I think it's going to be global. I guess the statement people come out with is there's nothing more certain in life than death and taxes. They should probably add regulation onto it as well, and rightly so. And look, we're long regulation. We believe in it. We think it's important. There's no point trying to get around it, but there is a point in trying to get it right. It's all very well talking about it in non-securities terms, but there are $700 trillion of securitized assets right out there. That's the holy grail for DeFi, and I think intuitively most of us know that, but it's much harder to make that happen, and it's partly bureaucracy, but frankly, I say this unashamedly, having been in TradFi, the current incumbents in TradFi who really control the regulated securities business have every incentive to be defensive. Of course they do, and they're not going to dive into this, and it's partly because they just don't even understand it. And I've talked to a number of boards of the biggest banks in Europe, and it's usually one or two of the board members who get it, and most of them don't. I'm not reflecting badly on them. It's just sort of a reality, and they tend to be older, as Novo said yesterday. I think most people over 50 don't understand NFTs. That's true of sort of many elements of the space. So there's a sort of defensive posture, but I just spent the last year and a half running SDX. I'm glad to see that SDX got its FINMA licenses to be a regulated exchange and CSV for regulated, natively issued digital securities. That's a big deal. I wish them well, and hopefully we can all work with them in the future. But that's the beginning of what I think within a few years will be a movement. I talk about this with Michael Ash, our head of investment banking. We're doing so much business today in investment banking, we can't hire fast enough because there's so many players in the space who need advice. But it's actually traditional advice. We're not using anything digital when we advise how they raise money and what they do. The next frontier is advising them to raise equity and debt instruments in regulated digital securities, and it's only a matter of time. The problem is you need more infrastructure, you need more regulation. You can't jump ahead of that one because you'll just go to jail. It's that simple. But the spoils are massive. When that whole complex of equity and debt and real estate, structured products, instruments go digital, it's going to be an extraordinary boom, and it's going to be it's genuinely democratizing, which is the exciting outcome we're looking forward to.
And so that's also going to, for that to happen, the counterparties in every trade, right, are going to also need to be on board with this technology.
Absolutely.
And so have we seen the beginnings of that type of mass adoption that's required at the institutional level? Have you seen that in your conversations currently? Like, are you having substantive conversations that are going to eventually lead into digital transformation effect, like Web3 type digital transformation at these large organizations?
Well, yes, and I can give you the timeline. You know, when I started in this space at R3, you know, we're very much enterprise blockchain focused, but owned by banks and talking to banks. And we were talking to banks back in 2015, 16 about whether bonds would go on the blockchain and whether equities would go on the blockchain. And here we are 6 years later. We're still talking about it, and it still hasn't happened. But underneath the understanding, the pieces of infrastructure, the regulation has moved forward. Like, we are materially closer to that than we were 6 years ago. Every single big institutional financial services player on the planet has some sort of blockchain digital asset interest. That's just a fact nowadays. And if you don't, you're going to be a dinosaur pretty quickly. Like, they're all leaning into this. So that alone gives us, you know, comfort that this is going to happen. But that's where we kind of have this dichotomy of, it's exciting that we've had so much progress, but there's so much more to do. So it looks promising, but I think, to be fair, the regulated digital securities is still a little way to go.
And so part of your business, actually, let's talk about M&A. You mentioned M&A advisory. It's also something that Coinbase engages in, and other organizations too. Obviously, without talking about even your own organization, have you seen a flurry of M&A activity in the European crypto scene? Do you suspect that that's going to lessen or increase over time? Marcus?
Yeah, I think the industry is still relatively nascent, and I think inevitably we'll see some consolidation. There are a lot of smaller companies out there that will probably get snapped up by larger companies. I think the amount of innovation that's happening is just extraordinary at the moment. That's part of one of the most exciting things about the space, is there's constant, almost every week there's some new idea being created. So I think we can see consolidation. The reality is also, organic versus inorganic growth. You have to look at both options, when you're looking to kind of scale any business. And it's just impossible to kind of build fast enough sometimes in crypto and any other industry. The other side of it, which is quite interesting, is that we have a ventures arm that takes kind of positions in a number of different businesses in the crypto space. That's something that I think has been really successful. I think others have followed the same path. So I think the innovation will continue. It's impossible for any one player to be able to cover all bases in their business. So I do think we'll see that kind of consolidation. If you also look at the more kind of traditional space as well, as things mature, you tend to get that kind of consolidation happening. So I think it's quite natural for that to happen. But again, I still think we're such early days at the moment. It's hard to predict anything in this industry.
Okay, well, so let's talk a little about the venture side. And we heard earlier that NFTs perhaps aren't well understood by people over the age of 50. But NFTs are something that, and I can say this, we were very fortunate to help launch NFTs in the first place as a concept, that most people didn't know what they were until this year. And suddenly we had the Beeple sale, for instance, I think was kind of the breakout moment, right? Where suddenly the front page of the New York Times and the Wall Street Journal and the FT were talking about NFTs, right? Do you find that, none of your businesses are primarily NFT-focused businesses, but are you finding that the air cover from NFTs becoming mainstream, is that benefiting your organizations? What do you think impact do you think that's going to have on the European market? Actually, Charlie, we'll start with you.
I think we're all becoming much more open-minded about the possibilities of where this is all going. I think this space is not determined by the price of Bitcoin. It goes beyond that. You said human capital going into the space. I think that's a very good way to describe it. Human capital, ideas, more networks, more things, more utilities, more applications. And so I think that's really fascinating. Also, the benchmark of the relationship between the old world of finance and the new world of finance. It used to be the arbiter was the FT. The tone of the conversation, the FT, which has been ha 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 for the last 8 years, led by the Alphaville.
Let's not speak ill of the FT in this room.
I've been an FT reader for years. And it's just been frustrating watching this. Oh, please, can you get here? And in 2021, you kind of feel they're coming on board, and there's some decent content coming through. And yes, it's a good newspaper in other areas, but come on, FT, get with the program. And so I think that a friend of mine recently said, trying to keep up with this space is like trying to drink through a fire hose. There's just so much happening and so many new projects, you can't possibly stay on top of it. We're trying to cover it, and it's hard enough, and that's all we do. So I can't imagine what people are doing when it's not all that they do. It is moving very quickly. And I think that, in terms of mainstream finance, I always had the view that somehow or another, this space will be the arbiter of the future of how everything's done, how business is done, how government bonds are done, how money works. I really hope we don't see central bank digital currencies in civilized countries, or countries that want to remain free, whatever freedom means these days. But I hope we see lots and lots of digital.
It's a hot take right there, everyone.
Yeah.
Someone anti-CBDCs. Actually, just personal opinions. Do you have personal opinions on CBDCs? Should they exist? Because, by the way, just to put a point on it, many countries in Europe, of course, are experimenting with this, many of these quite publicly.
Yeah, I mean, my take is in the digital asset space, you can have different types of assets that can coexist. And I think to say that you kind of CBDCs will never go anywhere and they'll never do anything, I mean, looking at some of the disadvantages of kind of fiat currencies today, exposure to monetary policy and inflation and all these other things, that kind of decentralized nature of assets like Bitcoin, present benefits that arguably you don't get with CBDCs. But is there a space, in the ecosystem for many different types of digital assets performing different functions? I think so. Just as I don't think, crypto will kind of totally do away with the traditional finance world. I think the two will coexist. But it's, for me, a revolution in how we're thinking about things, how blockchain-powered technologies and so on. And
there's enormous benefits to simply having an on-chain asset, right? It allows for much more efficient and efficacious transfer of value. So, Tim, what's your stance on CBDCs?
So I have a reasonably unique take on this. So many of you who've been in the space might remember Project Jasper, which I think was probably the OG CBDC project. Which bank was Project Jasper? Does anybody remember? Canada, Bank of Canada.
Wow.
So I remember January 2016 being up at the Bank of Canada with the big 4 Canadian banks, and we started that project. So that was one of the very first. Project Ubin, everybody knows that because it's still alive. That was started because I was talking with Deputy Prime Minister of Singapore and Ravi Menon, the head of MAS. I remember the conversation, and it was actually a 30-second conversation that turned into Project Ubin. If anybody knows why it's called Project Ubin, I'll give you a big prize. There's not many people who know why it's called that. And then there were a few more projects, Inathon, Project Lion Rock, that came out of R3, came out of my lab, and then more recently I was running Project Helvetia, which is the Swiss National Bank. Yep. And then we did Project Jura, which was the Swiss National Bank in France. So suffice to say, I've talked to just about every central bank over the last 6 years about this, and I think the point you made is the right one. CBDC is too broad a category. There are retail, there are wholesale, there are many different flavors of on-chain stable coin, fiat currency. It is an incredible sort of diaspora of different types of things. So it's dangerous to say CBDC is one thing.
So bucketing them is the issue, but
yeah.
But obviously you must see benefits here, otherwise
Absolutely.
You wouldn't have been.
And having seen that evolution through the years and the kind of the quality of the analysis, the deepening understanding of the underlying tech, the evolution of the underlying tech, now it's the point. I think it's inevitable that we'll see these different flavors of money. And I think we need them, and I think there's a space for them, and some of them will be, and here's where we flip it a bit on its head. It's going to be driven by us. At the end of the day, it's going to be driven by us, the consumers, and what we want to do and how we want to do it. And that's what's exciting about this space, right? Like, we will define where the capital goes and what kind of capabilities finally get built. But I do think it's inevitable. I think, for instance, the Swiss National Bank is going to do it. They're going to do a wholesale CBDC, which allows banking institutions to engage and do atomic or near atomic settlement, which then reduces settlement times, and it's just that alone
unlocks working capital, et cetera.
Which is an incredible, like, that's the stuff that on the ground we don't really understand as sort of the man and woman on the street. But if you understand the plumbing of financial services, that should, in theory, flow down to the final product that we buy, and it should be better for us
as consumers. So actually, let's talk a lot about that. Coinbase is well known as perhaps one of the most popular wallets in the world for the wallet function. So many people around the world, in Europe and beyond, have Coinbase wallets on their phone, on their desktop. Are you finding, and through that, they're using, for instance, maybe buying Bitcoin for the first time, $200 worth back in 2015. They're using that as the accelerator, the catalyst to learning a lot more. So 2 questions for you, Marcus. First is, are you seeing continued growth at Coinbase and on the wallet side? Are you seeing more and more people take it up? And then also, what are you doing as an organization to kind of further catalyze the growth of this? Are you investing in education?
Yeah, so I think just in terms of growth, I think you look at the whole industry, it's just only going one way in terms of growth. It's incredible how, as I say, that kind of first stepping stone for many people, which historically I think would always have been, buying Bitcoin because someone said it was a great idea to do it. I think there's a whole bunch of reasons now why people might get interested in different assets. We've really focused on trying to demystify the space. And just as we touched on the FT and the broader narrative, I think actually people often have that kind of fear that I don't understand this. This is too complicated. It's not for me. And we've focused massively on educational kind of campaigns. So we have an earn product where you can go onto the app or the website and you can earn some free crypto for learning about a particular asset. And what we find a lot of people doing is they do
How great is that, by the way? You're getting paid to learn about crypto.
But it's very addictive. And you go down that rabbit hole and it's like, wow, you earn $5 or whatever it might be. But actually, it's that knowledge that you've gained. And I didn't realize that, that particular asset could power this incredible new application. So I think these kind of things, draw people into the ecosystem. And then it's, and it's a stepping stone towards that kind of utility phase where crypto is that underlying fuel powering a range of really interesting applications. And so I think the more we can educate people, the more we can bring people in, and that includes regulators and governments and so on. I think everyone's going on that learning journey. When we all went into the space, I'll be honest, I knew very little. I knew a little bit about Bitcoin and knew a little bit about blockchain. Then all of a sudden you realize that people's knowledge is like, okay, now we start to see that actually that there's a broad range of use cases here. This is not a one-trick pony. I think that's where we take things, that's where the next billion users come from, is from that kind of demystifying the space.
Well, and actually that ties together the point we make about NFTs. There's something very abstract about lots of the stuff we do in this space that is not sort of intuitive. But NFTs makes it something you can understand. I was shocked a few months ago. It was around the Beeple time. I was sitting at the kitchen table with the kids, and I was mentioning NFTs, and Daddy, what's an NFT? This is 2 boys, 9 and 8. What's an NFT? And I thought, all right, this is going to be interesting. How am I going to get this one across? You know what? It took 30 seconds because they play Fortnite, and this innate notion of digital assets that you can sort of buy and sell using digital assets that you earn in different ways is innate to that generation. So it's and therefore that's one of the big reasons why NFT has been so useful, because it's like, oh, I can get my head around something that I would want to own, which is art. Everybody understands that art has value because people want it. Then you start to think about how it would look in digital form. Then you put the transition into video games isn't that tricky. Now we're into the metaverse. That wasn't that hard to explain what the metaverse is. Then you can start talking about economics and the complexities of global finance and how everybody raises capital. But like NFTs, the best thing that happened to us, I think.
Yeah, so well, certainly, and actually we can talk a little bit about media right now, because media certainly has been covering NFTs like crazy. It seems like every day there's a new celebrity selling some new collectible version of themselves, right? How have you found that the media has shifted over time in its perception of the crypto industry? Tim, let's start with you, and then we'll go around the horn.
I think you alluded to it before, the FT shift. I was equally, I'm a big FT fan versus the overly verbose Wall Street Journal. The FT just says it how it is, and I've always appreciated that. But boy, oh boy, did they just lose touch of this space. So it's great to see them, get there and see things like articles on Ethereum about what that means and what that could do. There's an article that keeps coming up on my FT app about ownership and the sort of how ownership changes in this new world. Like now we're talking about things that matter, and we're not getting into the sensationalism of things that can and have happened in this space. And that's what I think we're starting to see. We're talking about real world apps. That's why NFTs, that's why they've grabbed onto it, because it's something everyone can understand. Like, oh, I see. Now, even in the last sort of few weeks, I've got on my FT app, I've got a sort of blockchain and crypto thing, and you hit those to get anything that's got that word in it. And for many months, the last thing that was there was 2 months old. Now it's never more than a day or two since you've had someone mention something about this space. And then you drill in, and it's starting to get into meaty goodness about what this is going to do. So that's a fantastic shift.
Which might be a reflection of their audience set, right? Newspapers have to write for their audiences. So Marcus, what about you? You've been, of course, deep in the space for the last several years. How have you seen media shift over time?
Yeah, and obviously I have a lot of conversations with the media. Every week we're talking about what's going on in the industry. I think, look, City AM had a kind of crypto AM column going, for years now, when really we're pioneers in that space. I think the FT, as you say, daily coverage now, and then broader mainstream media, and not just focusing on the unfortunate things that happen sometimes, like hacks and scams. There's scams in every industry. We've got to do as much as we can to try and prevent them, but unfortunately, people sometimes do lose money. So again, what's the narrative? What steps are we taking to educate people, to help them navigate the space without exposing themselves to risk? I think that's an important part. But on the positive side, yeah, all those interesting use cases now are starting to be fleshed out. I think one other aspect is if you look at many countries around the world, developing countries, you've got mobile phone penetration at 80, 90%, but most people have no access at all to financial services. And I find that often kind of captures people's minds, the possibility that just by an app on your phone, many of these phones are running older versions of Android, but a simple low data usage app can literally empower someone to start a business, to be able to save money. That kind of thing, those are the kind of messages we need to drive as an industry. And
do you think the reporters are asking questions about that today? Are they when they talk to you, are they asking good questions now that might perhaps eventually lead to a feature piece on something like international remittances, as an example?
Yeah, no, I think they're always asking good questions. Yeah, I mean, I think it's easy to kind of get caught up in the slight sensationalist narrative sometimes of hacks or whatever it might be. But no, I consistently find across the broad spread that they're always asking very intelligent questions, very sharp questions, and that's continued to be the case. That the knowledge base has increased over time. So they're much more nuanced and sophisticated questions that are coming through now. And I think that's just, we need to be realistic. As the industry, we need to make the case for why they should be interested in this firstly, and what the broader kind of story is here. What is the narrative? Where is this going? And that's a step-by-step process. But I feel really encouraged in the conversations that I'm having.
But they're certainly also talking about price all the time. I mean, at the end of the day, I know we just talked about NFTs. We talked about life-changing uses of technology. But right now, a lot of the conversation is what happened yesterday in the Bitcoin market. And Charlie, this is something that your company is tracking quite closely. And I imagine you're consulted all the time by media for determining what exactly occurred and precisely why. I'm changing topics. We only have a few minutes here. But I saw an interesting statistic at your booth, which was your organization believes that the fair price of Bitcoin is less than the current price of Bitcoin. There's a substantial premium, and that's been the case for a number of months now. So I understand we're going outside the crypto in Europe scene, but I think it's an important topic. Do you think Bitcoin's overpriced?
Yes.
Why?
Because the level of traffic approximately halved from the January to April period when China was heavily involved, and Elon Musk was the meme of the moment. And the traffic has collapsed since then. And there's disagreements by different data providers around the world. And ByteTree's data agrees with the data from Coinbase. Blockchain.com, I beg your pardon, not Coinbase. And some other competitors have got data that could be, famous data that could be 35 times overstated or 5 times overstated, depending on the firm.
But the point is, you do believe, and you have some factual evidence or reason why you think that Bitcoin is currently overpriced.
Yeah,
but still quite valuable.
But it's still a thing, and it's still
Right.
No one's saying it's worth nothing. It's just the price is out of kilter with events. We haven't seen an on-chain recovery.
Okay.
And you can see that by low fees, low transaction count, low transaction value. Also, if you look at the velocity in things like stablecoins that interact with Bitcoin, that's also down. So there are no data points that say there's more activity in the blockchain today than pre-May.
Well, that's on the Bitcoin blockchain. There's also been extraordinary growth in other chains that we've seen over time.
Yeah.
And the advent of DeFi is one of those things. You guys are both working and running very large organizations, and I'm going to call it centralized finance, although you're no doubt making investments in DeFi. Marcus, what do you think about DeFi personally? Do you believe that there's real innovation happening there? Do you think it's a threat to consumers? Do you think that it's a boon, potentially?
Yeah, that's a fantastic question. So it's clearly an exciting space. There's a lot of innovation going on. Things are shifting every single day. I think touching back on the topic we covered earlier, regulation, I think you'll find that regulators are going to be concerned about how do we get a handle on this. Otherwise, regulated financial services just simply moves into this ether that we can't control. And of course, there are no easy answers to how do you regulate something which is totally decentralized. How do you regulate a smart contract? How do you even get your hands around that? So I think those are going to be the big questions that need to be answered. I think, undoubtedly there's a lot of innovation going on there. And it's a space that everybody is watching. And I think there's a lot more visibility now on what's happening in DeFi. It's something that's being covered more regularly. So I think the key question for me is how will regulators, governments get their arms around this? And how will, I think there'll always be a place for centralized institutions. And I think the Coinbases and the Galaxies of the world, are there because people want that trusted way into the ecosystem and, someone to help them navigate that, provide advice and so on. So I think there will always be a place where trusted centralized parties will have a role. Where DeFi lands is anyone's guess, but I do think the key issue is, how will that be regulated? How will that be managed by kind of governments and regulators?
Worth noting that Coinbase definitely ventures sometimes invest in DeFi-related organizations. It's just worth noting that you're playing on both sides very intelligently, I might add. Galaxy doing the same. Definitely.
I've said this a few times publicly, will the real DeFi please stand up? Before I answer it, I'm long DeFi, we are long DeFi, we think that's where the exciting movement is, it's where the innovation is happening, it's where the new products and services for consumers, for corporations, for governments will arrive in the next few years. It's super exciting. Some stuff will fail, some stuff will do well. It's what we should see, and more people should invest in it because then we'll get more innovation. However, will the real DeFi please stand up? DeFi as an end in itself is not the point. As you rightly said, CeFi has its place. Bitcoin, if anything, proved to all of us that the DeFi thing was a myth because so many centralized elements had to be built to get more people into it. But DeFi has a place and CeFi has a place. The real answer is democratization. You can maybe use other words, but it's faster.
As opposed to decentralized.
Yeah, I think the real DeFi is democratized finance, which is going to leverage big elements of DeFi and big elements of CeFi and regulation and freedom. But ultimately, what are we all doing this for? It's a faster, better, cheaper, more effective way of living our lives. That's what's at stake here. And that's why this is such an exciting space, because we all see it, we all know it, and we all think the 20th century model sucks. We all think that the Friedman capitalism of the 60s and 70s, which created shareholder primacy model, which got us to the point where Facebook's getting hauled over the coals right now for being very naughty boys. That sucks. That's a 20th century construct that we need to get away from. Let's get to a future where it's faster, better, cheaper, safer, more controlled, more ownership. DeFi, as it's currently called, is going to help that, but the real DeFi should stand up. It's democratized finance, and we need all of the above.
Wow. So that's honestly inspirational, and I really agree with you. Michael Anderson from Framework Ventures calls it open source finance, but I think democratized finance might even be a more holistic term to describe it. So what are you most excited about, Charlie? We only have a few minutes left in the panel. What are you most excited about in terms of crypto today? What do you think is the highest potential?
The excitement of the unknown. But I want to come back to a comment earlier about media. Obviously UK is a leader in English language media. And I think that the crypto media is not nearly as strong in this country as it should be because the regulator has basically banned crypto for mainstream investment portfolios. So any UK citizen who has a portfolio, pension fund, whatever, has no crypto in it. And the reason for that is because it has been banned. It hasn't been banned at the business-to-business level. This is a thriving ecosystem for business-to-business. And so, you were saying that the newspapers write what their readers want to read. Well, if you don't own crypto, then you're not going to write the stories. So I think that if that ban was unwound by the FCA, then the quality of the mainstream media globally would massively improve.
Well, Charlie, I appreciate that. Marcus, last take here. What are you most excited about when it comes to crypto?
I think it's the pace of innovation, the pace of change, the fact that this is mainstream now. This is, as you say, 3 years ago, it would have been a very different story. And I think it's been catapulted into mainstream consciousness, and we should embrace NFTs and any other use cases that help to, demystify and explain this to people. It's not going away. This is just going to grow and grow. So I'm really excited about the possibilities.
Fantastic. Well, today on this panel, we learned that it seems like a central bank inevitably will be coming out with a CBDC. We learned that innovation is at the very beginning. We're in the early innings, so to speak, when it comes to the crypto journey. We've learned that there's a lot of money going into Bitcoin funds overnight and that thing is picking up. We learned that M&A activity is accelerating, and we learned that Europe is the hub of crypto activity today. So thank you, extraordinary panelists, for this wonderful conversation, and thank you, audience, and the organizers for putting us all together.
Thank you, guys.